Hello, guys. Welcome to the 144th edition of the Trading Opportunities webinar. And let me just quickly run a very small microphone test at my end before we actually get started with the actual chat. Yes, looks to be working fine at my end. So let's start off this webinar, guys. Welcome. And today, in the 144th edition of the Trading Opportunities webinar, my name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis YouTube channel, as well as 50eyes.com website. We are currently broadcasting this webinar live on our YouTube as well as LinkedIn page. So wherever you are viewing it, hello. And let me start off with a very quick introduction. With these webinars, what we have been doing is coming live every Friday, and currently we are doing them at 4:30 p.m. GMT, 10 p.m. IST. So just convert it to your time zone wherever you are in the world, and you can catch us live. And we discuss major market movements so far in the past 142 webinars. We have captured a total of 362 trades. Of course, all live in front of you guys, in front of our YouTube audience, LinkedIn audience. What happened with the 143rd one we'll discuss today in 144th edition, right? Apart from all this, I'm the author of the book Think with the Markets. You can find more details by visiting this link or checking it directly on Amazon's Kindle electronic delivery platform, where you can get this book with one click. It is for intermediate to advanced traders, and if you are completely new, you can check out my video course, which has 1600 plus students and heavily rated. So that's it for the very quick intro. The way we will proceed with this webinar is always start with Euro, crude oil, gold, S&P, Nifty, and then Bitcoin. And we will first look at the discussion from the last webinar on Euro and then discuss the current live chart. That's the way we will move forward with the webinars. Lastly, here's a track record of my past work since I've been in this game for good amount of time. I have been keeping a record of my videos and webinars published since 2016. As you can see, we have maintained a exceptionally high industry beating accuracy of 80% plus consistently for 6 years till 2021. You can see all the records here by visiting the spreadsheet. Over here we have the date, instrument name, and everything else mentioned here. As you can see, what happened with the analysis, the link, etc., etc. After which we started this weekly webinar series, and for that we already have the tally to 362. We definitely need to update this part. As about it for our introduction, let's now head over and check the comments real quick before we proceed with the webinars. Looks like everything is working. I have Manuel and Rooster, Manuel Costa, and thank you for the confirmation again, guys. Hello there, and voice is working fine. Okay, I'll just check it at mine again. Yes. So in that case, let's now head over and actually start off with our discussion. So here is the 143rd webinar conducted on 29th of November. And here is the discussion of Euro. Let's see what was being said on the chart of Euro in our last webinar before we proceed with the current one. So we had, let's see what it is by playing the video. I'll split 2x quality set to 1080. Right. So we have a setup of wave 4 under continuation, and the possibility we are discussing here is the possibility of wave 4 having one leg up remaining before it continues down. And I guess 1.05118 is the level above which or below which, that's a short level actually. Yes, that's the level for looking for selling opportunities. So second possibility is as per the yellow count straight down. Sorry, the first possibility is as per the yellow count straight down movement. Secondary idea is that this market can go a little bit up before going lower. That was the analysis from our last webinar, as you can see clearly pointed out with different colors, etc., etc. And hello there, hello Mohammed. So with that being said, let's now head over to our live chart of S&P and sorry Euro and see what's the stuff going on here. So S&P is greater than 6100. Yes. One second. So at the time of the last discussion, the market was somewhere around 1.05418, I guess, and the date was 29th November. So the market was somewhere here. The market did go a little bit lower. It kind of triggered our bearish view, but did not give a follow through. So the things have not really progressed as expected in this counter. Although it is following our secondary count or H2 count, it's a little bit more complex than what you call a straightforward situation. Hello, Dawood. So let's see what's happening here. Let me just zoom into this chart and discuss a few things. So first of all, from this point of reference, which is the same point of reference we had in our last webinar, what we are looking for is a wave 4 correction. A wave 4 correction in Elliott Wave terminologies is basically a three-wave movement. It can be a zigzag, flat, or whatever WXY complex. In this case, we are assuming it moving something like this, like a zigzag basically. And in which case we can call this the A wave, this is the B wave, and this will be what you call the C wave. Once this three leg progression is complete, what we look for is a leg lower or a market taking out the lows. So here so far we have assumed that this market has completed the A wave over here, B wave over here, quite unusual fashion I have to say, and we are assuming that the C wave is either complete here or may have some more upside remaining. Both possibilities exist. So now, given that the both scenarios are existent here, the setup remains literally the same. We are still expecting that if the C completes here as a 4 or it C completes here as a 4, we will look for some sell off. So basically, I am still waiting for selling opportunities on this counter, and I have to put in an additional alert here. Now the setup becomes remains the same. We still want to go short and look for shorting opportunities, but here I'll be a little bit more conservative. While I have placed some higher alerts, I will be more interested in taking shorts below 1.04737. That way, I have a higher certainty of this market playing itself out. And personally, I believe that C may have itself completed here. Right, it is possible that C is complete, making the fourth complete, and the market can straight off go down. But then again, as I said, the possibility of it having one more leg up is quite likely as well. So I'm not going to speculate too much. And as just mentioned, we are going to go a little bit conservative here, anyways. So since we don't want any quick or incorrect entries, I mean, we can still have incorrect entries, but we don't want a very quick entry. So it's a non-issue. We'll just wait for the market to go below this mentioned level, unless, of course, we see something very strong or very clear analysis or something like that. And that being said, I guess it's a wait and watch market. Nothing much to add here. And as far as the upside resistance levels are concerned, this market has already cleared one and is testing the other one, which is at 1.061. So I don't have much to add here. It's already testing the levels. If it shows a rejection, we already have the setup in play. I guess I'll just put an end to my words for Euro USD for now here. If you guys have any doubts or queries related to the analysis which we just discussed, you can just push them in the live chat before we head over to the next chart of crude oil. And just give me a quick moment. I have some positions open, so I'll just take a look at them. Nothing special here. So we'll discuss it when we reach gold chart. So I don't see any doubts or queries. So I'll just head over to our next chart of crude oil. And before that, obviously, we'll just have a quick look at the current market view on crude oil. Sorry, last webinar's view on crude oil, I mean. So here is the chart from our last webinar. We, as you guys know, we did not discuss as much because the bearish view is from a swing perspective, and although I'm holding a short here, it's not a very huge position, and it's just the analysis is the same since the last two webinars. So We are expecting A down, B sideways, and then down. And there was another scenario where it can just propagate within this box. Now let's head over to the actual chart because, as I mentioned, there isn't much going on here. And this is the same count from our last webinar. Hey, good evening, Raghu. So, as I mentioned, this is the same count from our last webinar. We are still expecting this. One second, let me just check. Yes. Now that I look at it again, you get the idea. We are just expecting something like this. Here, I have tried to count it as a triangle. It may very well not be a triangle, but who cares? The setup is working. We had 2, 3 other counts, all pointless, nothing much to discuss here. The main theory was either it will go straight down or it will go sideways and in this box and then go down. So now that we are near the level of important level of 67, if the market goes below it, I might look to add more shorts because that kind of not validated, kind of increases the possibility that this market is just going to head lower, right? So with that being said, now let's conclude it because again, it's kind of the same count. We haven't really added anything new here. The analysis remains the same: A down, B up, C down, and here is the actual A leg, the B leg, and either the C leg is playing out or the second scenario is that this market is going to propagate within this box range and the B is not here but is going to go somewhere there. But as you can see here with the current price action, the market going near 67, going and sustaining below 67 would be a sign that B is possibly complete. So that's why I'll just keep holding my shorts, which I've been doing for more than a week now, and maybe look to add. And one thing we have to discuss is downside target levels. Immediate is 63.1. Keep in mind we are looking at a daily chart, so these targets I probably will not hold till these longer targets. Maybe not because it's a very lower target anyways. So immediate target would be anything below 65.38 would be an immediate low or a minor profit booking level. So that's about it. I don't think there's much to add here. It's a swing trade. We'll see how it goes. Probably add more to it as the time or position allows it. Good morning to you, Luis. And as wait and watch. Not a very interesting market, I would say. Maybe it is, but I'm not very interested in it. There are better plays out there. So, with that being said, if you guys had doubts or questions, just let me know in the live chat and I'll take a few moments and then head over to the chart of gold. Hi, Uma. And gold, yes, of course, that is the next chart we have. Just wait a few moments here. Excuse me. Your insights have been really helpful, Mohammed says. Thank you, Mohammed. Okay, with that, let's now head over to our chart. Where is that? So here's the recording from our last webinar. Let's head somewhere in the middle and check what was being discussed on the chart of gold before we go and look at the live chart from the current market. Here is one of the configurations we are looking at. I just want to play the video to show you what we were discussing. As a matter of fact, even I have to check what was I saying. It was, a week is a long time. And I remember I'm following two hypotheses. I don't know how many I've discussed in these public webinars, but we are following two hypotheses in our private Slack group. So we looking for a corrective pullback, I guess, on the 15-minute chart. The price was at the time of discussion around 2660, and we are hypothesizing a possible up move from 2660 for wave B. That's one hypothesis. Let me see if there is something else. I guess this become a complex discussion for a public webinar, and really there is only so much I can say. There are some things that just can't be explained in these things. I guess that's the main thing we discussed. And yeah, that's the high time frame count starting around 18 something something. So that also had the counter view. Anyways, we had a counter view on the higher time frame and minor bullish and then bearish on the shorter time frame, which is what we are going to look at right now because we had a minor long position around above 2660 for the wave C's completion of the wave B circle degree. Now let's have a look at the actual chart. Where is the chart? WTI crude. Where is the gold? Gold, 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 gold. There it is, gold. Let me remove everything. And there are some questions. Nirav, your YouTube says you have 303 videos, while I count the total videos, it's like 298. Log the videos. Maybe they are talking about members posts. Some videos are locked for the members of the YouTube membership, I think. Yeah, yes, YouTube membership. So you will have to unlock them by yourselves if you really want them. Anyways, so getting back to our discussion on gold, and please, I would like if you use your real name or something I can pronounce in these webinars. Be real, man. So where is it? We are looking at the chart of gold. Last time we were discussing that date was 29th November and 26. Let's get the actual price. The price at the time of discussion was 2659. 2659 on 29th November. Did it go up? I guess it did go a little bit up, but did it really? Or was it already up from there and going down when we discussed it? That's a thing. We can look at it A down, B up, C down, and then we are waiting for an up leg. And we do have some minor movement higher above somewhere here to 2660, I guess. So the setup was breakout longs. Let's see. Never triggered. Never went above whatever these highs are, and it just went down. And since then, we have been following two counts, and I actually took a minor, what do you call, short position on this counter. So we'll have a quick look at that as well, perhaps the reasoning. So first of all, let's take this market from this point of reference. The price level is around 2720. From there on, we have 1, 2, 3, 4, 5, a corrective structure ending here. From here, we have another, sorry, not a corrective, and possible impulse ending here. And from there on, we have some sideways move. So idea here is pretty neat, I'll just say, or simple. I don't know if neat is the right word for this situation, given we are in a sort of a complex correction here. Now the idea is simple. We are looking for a leg down. Call it just an A for the sake of simplicity. Call that the B perhaps and the C down. So we are over here in the A, right? Matching it with the right hand side rough analysis. And this is the B still continuing. The B is possibly still continuing here. So some upside may be remaining here. And then there is an expectancy of a C. Now, my short position was based on literally this analysis. My thinking is that either the B is complete already with my counts, counting this as a flat, maybe here. If not, then maybe here, right? And then we should see something like this. However, I have already taken a only taken a partial short position here, right? The reason is that I want to go or add more longs or build up a position if I feel like I'm in the right side of the market. And that would basically mean this market takes out 2624. Actually, I should have an alert there as well. So if the market takes out 26.24 followed by 26.16, then yes, I'll be comfortable adding more to it, more to the short position. If not, if it just continues going up, then possibly I might hit the stop loss, and it's better to hit the stop loss with smaller position. No wiser words have been said. Just joking. So anyways, that's the idea here. I'll build up on my short side if the market sustains below 2624, specifically below 2616. Idea will be to see the market below 2605. So plenty of room here from 2616 to 2605. And if the market continues going up, then I'm just okay with the smaller position I have to hold it and see if it works out, like if it goes up and then reverses or not. So long story short, I've discussed the whole trade setup, the position sizing and downsizing and upsizing idea here, which I'm actually using. So it's not an idea, it's a running trade here. And hypothesis is just very simple, straight down or small leg up or minor move up and then down. So nothing much to add here. On gold, I guess we can have a very quick look at some targets to the downside. One is coming at 2594. So I'll just type that in, and here it is, 2594, somewhere here. Yes. So that's the minimum downside expectation. And as such, actually, the minimum is technically this 2604 and lower levels. So whatever, I'll see how the market behaves and then accordingly close my positions, take the profits, etc., etc. I don't always stick with these levels or targets. Just keep that in mind, because the market is always moving, the price action is always evolving. So the analysis is always evolving. It's only that we can only come once in a week here in the public webinars. And yes, those of you who are new here, we do have a private Slack group. In case you did not read the bottom of the video, you can request for details for the private Slack group actually. So here is the actual trade we posted on Slack. Let's see, short side with the idea to add more. You can see the whole idea is posted here. 2627 and etc. Detailed count analysis, everything is posted here on our Slack. So that's it for our quick take on gold chart. I think that's about it for the discussion. We have discussed the main theme, and yes, one important thing: if we do see the market going higher, then I'll probably look to exit in loss about 2660. Above this level, I'll consider taking out my remaining position. I don't have a stop loss placed in it. It's not really required at this point. Maybe I will, maybe not, but that's the general reference level I have in mind for exits if required. Excuse me. That's about it for our quick take on gold. Not very quick. I think we have given quite amount of time to this discussion. Gold generally does take, it is becoming a little bit complex for the time being. So if you are enjoying the content so far, do not forget to hit the like. And yeah, much more important than likes is sharing the content. I'm seeing a drop in the views since the last webinar. So I'll requesting you guys, as I do in every webinar, and I don't know how many of you guys actually do respond to these requests. Kindly make sure to share this content with at least 5 of your colleagues, social media, or groups of traders which you have, so that we can reach the requisite audience and get more of the what you call people who really enjoy this content with us. As about it for our take on gold, I'll wait a few moments before I move over to the chart of S&P, and then we'll have a look at Nifty and in the end BTC. So here is our chart of S&P's 500 from our last discussion. We are currently looking at the recording from our 29th November webinar, 143rd webinar actually. And let's see what is being said here. It's a lot of lengthy discussions here. Let me see if we can get to the later part. From yes, I recall it's lengthy because I had a running scalp trade and I also have a swing trade which was running at the time. Scalp trades, I think we closed when we were conducting the webinar, and the swing trades were still running. So we were long. That is something I definitely know because we just closed the remaining positions, or they were auto closed because our trail was hitting profits. But what is the analysis here? So I guess we are pointing out some upside level 6160 and so on and so forth. And where's the count? I'm just checking it for the sake of record keeping. So since I can't get to the actual counts, I'll just give you a rough idea. We were looking for bullish activity. Super bullish would be like this. If not, then we were waiting for something like 6160 as our upside resistance level. That was the rough take. I still don't have the exact analysis from the last webinar. I guess you guys can check it. We tried our best. We just didn't have the time, right? Let's check the date. 29th November. The market would have been somewhere over within this range. And so our idea was that we wait for this market to go higher. And since we had a long trade and I've closed in profit, we can safely say that it was a +1 here, right? Or a trade which has worked out from our last discussion. Right now, let's look at the exact idea which I have in mind, or the current count instead of our past. What do you call trade? So my current idea was that let me just zoom in. Thank you all. Your videos kindly share the private groups. Private groups not something I share, mate. Just read the message on the bottom. You will have to send inquiries, and there's a whole process for it. So this is our point of reference, and I'm considering this as a wave one over here. And the idea I had in mind was that this may be a continuation for two, or maybe the two is completed. It didn't really matter because the overall idea is that we are looking for more upside. So basically, long story short here becomes is, even if you don't know the counts, is that our bullish idea remains intact. We expect either straight up bullish movement or correction and then a bullish movement. So that means this market is still on for what we would call a swing perspective long trade. All right, swing perspective long means we can't take outright longs and expect a small stop loss and then we are making some money. As a matter of fact, our last trade was running 6,000. Sorry, I like to check the exact number. I think 5910 something, or maybe deeper. So it was running for quite some time, or 6010, I think. That was the addition. Anyways, we'll check it in the Slack in a moment. So what I'm saying here is that the main theme here remains that we wait for the down leg either here and then a move up, or we wait or we see a straight off movement to the upside. Now for this correction, I have counted it as a kind of a zigzag, but I'm assuming it can also be counted as a WXY. As a matter of fact, I guess I can see it right now as well. But as I just mentioned, one second. Yes, and A and B and C here. We can just call this. I have to double check it later as over A, perhaps a B, and a C here, maybe, with that being B, maybe looks like it. Yes. Yeah, it actually fits in. I don't have to double check it. It works. There's only one aspect of it which I don't like. So I'm assuming it's not an ABC. It does look like one, but it's just not fitting in one of my own personal uh, rules, or not rules, guidelines, kind of, I can say. So I'm assuming it's a WXY here, but for the sake of public count analysis, I don't want to delve in too much into details. So let's assume it's an ABC up. And with that being said, I think the C may have one leg remaining. It does look like very much like that. And we have after that the expected pullback, which we are assuming will give us the flat correction. Let's call it a circle degree A, a circle degree B, and a circle degree C. So in case those of you who are new here, the flat correction would be something like this. So circle degree A is, as you can see already here, complete, and this is the B, which is what we are assuming is in play here. And as soon as it completes, we are expecting this C leg down. Again, it's just an hypothesis. There are other ways this market can play out, and we'll see it when we'll see it. Actually, I'll update it when I see it. That's what I wanted to say. So, anyways, that's our quick take on S&P's 500. We do have some marked resistance level, not very important because it's already there, 6110. It's already near that level, and keep in mind these levels are not supposed to be very precise. They are supposed to be like near around these levels. The market will do something, not exactly at those levels. So, since the market is already near around that level, we are already seeing this count in play, and if everything works out, we can expect this C leg pullback, and then I can look for building up longs again as we had previously build up longs on this counter. So long story short, I'll look for longs. I mean, that's a bit late. Above 6110, if the market sustains, we can look for longs, or otherwise I'll just look for pullback of this market to 6050 and perhaps lower levels. Basically, on the completion of C, we can figure that out in live market and then look for longs. So wait for longs on this counter either above 6110 or on pullback to wherever the wave C ends. It will be below at least 6050, obviously. So that's it for our take on S&P. I guess it gives us a clear picture, and with that we can also have a look at our last trade. Namaste, R Singli. With that we can also have a look at the last trade on S&P where we closed it. What was the trade setup, etc., etc. Where is that? All longs closed in profit. Trail hit. So where was the trail? The trail was at 6080, and we have ultimately too many posts. We also have the scalps in between. So at some point, I guess it was 6050. Oh, so resistance. So here's the scalp trade. We have already discussed that in the last webinar, I guess. What's this entry for 6024? There, so there is a swing entry from our posts. Let's see, 6005. So as you can see, 6005 is the level where we originally entered a swing long, and as you can see, we closed it at 6080 as our trail was hit. So good 70 plus points, roughly speaking, from our original entry. So that was a trade which was posted live in our Slack group, obviously. Again, details for all that you will have to request. Links and everything is in the description, or it's also scrolling below. With that being said, we are now done with our discussion on S&P's 500, and we'll now head over and have a look at the chart of Nifty 50 and the discussion pertaining to that chart. Obviously, those of you guys who are enjoying the content, do not forget to share this content with at least 5 of your friends, colleagues, or traders groups. And obviously, hit the like button. Keep your sharing up, guys. We definitely need more participation from audience, which will appreciate our work further. So here is our chart from last webinar. Let's see what was being said on this chart before heading to the current discussion. What's that? We are looking for longs about 24350. Very simple. Let's see if there was anything to add. There was nothing to add. So last webinar, 29th November, we were looking for longs about 24350 was the analysis. Let's see what has happened thus far on this counter. Let me open the chart of Nifty here. We have a lot of charts loaded up. So here is the chart of Nifty 50 here from our last webinar. Let's go to 29th November. Here is 29th November, and as you can see, the 2-4, whatever that level was, that is, we were expecting long above it, has worked out. We had a analysis, we had a discussion about that analysis and the trade setup around it, and it has worked out. So for those of you guys who were live, I hope that was of use. I mean, how could it not be? But anyways, moving on with our analysis. Here is what I think might be happening on this counter. From this point of reference, we are assuming that we may have a trend change. It's not confirmed yet, and if it really is a trend change, and then we will like to thank you Arsingly for letting our viewers know that you were there. Again, we saw the last week's recording, but it's always exceptionally good to see active viewers telling our other viewers of the situation and the stories. Right. So again, getting back to our analysis, and then I'll look at the comments again. So first of all, we do have a point of reference here. Let me remove everything. So from this point of reference, what we have is an upside leg. I'm assuming it maybe as a 1, maybe as an A, and then this is a 2. Now, if we assume it as a 1 and 2, we are assuming the bullish possibility, and with the bullish possibility, we are assuming that there is a trend change happening. Now, is it happening? Is it not happening? Remains to be seen. But so far, in a trend, what we like to see is a 1, a 2, and a 3, strong 3, right? We don't have a strong 3 so far, so that's why the reason I was saying that we don't have complete evidence. We have an impulse here. This could be the 1 of 3. Now, what I'm talking about 1 of 3, I'm just talking about the fractal nature of Elliott Wave, which basically says that every impulse will have basically 1, 3, and 5 will have 5 waves inside of them. So if you look at this third specifically, you will have something like this: a dot 1, a dot 2, let's say dot 3, dot 4, and dot 5. So what we have so far is possibly a dot 1, and then it will be having a possibly a dot 2, and then it will be having a dot 3, dot 4, dot 5. So once we have that, you get the idea, right? If this count is super bullish, then this market has what is 1, 2, 3 ups, 3 up legs remaining on the minimum. If this count is correct, of course, it's super bullish, then it will continue giving us strong up moves. Right. So, but instead of living in fairyland where everything is possible and everything is rosy and green, coming back to reality, the fact of the matter remains that this was a pivotal level, the level of 23,265, and the market had to give a move up, but it does not always have to be an impulse or a change in trend. It could just be a temporary minor leg up, which would mean a 3 wave correction. And as you can see here, I mean, anyone can see here, we have a first leg correction, next leg. So we have the completed the minimum 3 wave correction. So it is also a point we need to be cautious. And anyways, we are expecting correction for wave 2 here of the dot 2 degree in the yellow. So keeping both scenarios in mind, here's the point: we need to be cautious. If the wave 2 correction completes and then gives us a long trading opportunity, we are more than happy to take new longs above what is this level. Let me remove this. Basically, a breakout long is only what we are interested in right now. 24,830 plus levels, we are interested in longs. Otherwise, just what I just mentioned, that minimum 3 waves are required at any correction, and minimum 3 waves are complete so far already, right? So with that being said, remain cautious on this counter, and there are some very specific clear stock specific plays we are seeing. But again, I don't discuss these things in public webinars, kind of outside the scope of our discussions. So we'll have to satisfy this current webinar with this much discussion. Stay cautious. I have discussed the upside side of very simple and straightforward, just like our last webinar. As far as the pullbacks are concerned, we can have some targets and levels to be specific, but I personally feel that's not really required. We want the market to see stopping point somewhere within this range. I'll just mark the upside and downside levels: 24,530 to 24,340. So somewhere within this range, we expect that this market can hold for the wave two if it really is a wave two, and then can take off. If that does happen, that's good for us, and we will be quite interested in longs. As a matter of fact, I don't want to pay much attention, and hence I'll just push an alert. If the market really does go there, then I'll look at it. Otherwise, I'll want to look at it near the breakout level. That's it for our quick take on Nifty. I've discussed not just the trade setup, but the whole idea on the different scenarios this market can play out. With that being said, we are done with our Nifty chart, and we'll have a very quick look at BTC afterwards. Again, those of you guys who are enjoying the content and liking it, hit the like and share the content before we move over to our last chart. And here are some comments. It was helpful. Thank you, Nirav, and you're very welcome, Singli. Raghu, for Nifty's point of reference mentioned here, the corrective A wave for all-time high of 27,200. So I'm not sure about that. Let's see. 27,200. So no, we are not taking a point of reference there. We are, I'll have to go to higher time frame. So yes, the idea was that either we are seeing a stoppage of the whole move here. So either it's the end of the correction we started around here, or if not, then this correction can have more lag down. That's why I mentioned that from this point of reference, we will need to see at least three legs, and the three legs are over. If this was a complete reversal, this is a complete reversal, then we'll continue to see upside. If not, then the market can go down from here. That's the whole thing. Hopefully you can put it together now. And yes, the high is 26,280 something level. So you can put it together, Raghu. Again, if not, you can just let me know in the private Slack group if you need a higher time frame analysis. I don't think you need it. I have posted it in Slack. Just check the last 4 or 5 posts. I have posted this whole thing here, all of this in detail. And if there are multiple views, I have posted there, so you won't need it. Right. So that's it for our take on Nifty. Again, guys, if you have any doubts or questions, just let me know in the live chat, and we'll now move over to our last chart of Bitcoin. Right. Here is the recording from our last webinar. The discussion wasn't very big, but nevertheless, we'll have a look at it for the sake of record keeping. And we are looking at the chart of BTC here, and the assumption was, let's just zoom in, that one is here, and we are expecting a sideways correction, which will then lead to possibly more upside here. We had discussed some pullback levels, but those were kind of less likely because the pullback was quite deep, or the retracement was quite deep, and the pattern wasn't fitting it. But anyways, not getting into that much discussion, this is the idea we were looking for: double bracket one, double bracket two, and then 1 2 3 4. So this was super bullish. Let's see now, and the price at the time of discussion is what we want to note: 97,155. So let's just leave it there and go to the actual chart now. Here it is, the BTC chart. 97,155, where it is here somewhere. So we were somewhere here when I suggested the two might be there. This resistance level was marked, it was 103,367. It is kind of respected. Again, why would it not be? Elliott Wave is something that works out so well in the markets that you can see it day in and day out working out for us. So that's a resistance level which held, and now we want to see sustenance above this level. Only then we can say that this market is going more bullish, and personally it does look like it is working out so far. Actually, we can get rid of it. We can push the 2 there and get rid of this second chart. Long story short, we want to see sustenance of market above 103,210. So 10320, that's a pretty big number. But that's where we are at with BTC. Once we see sustenance of this market above 10320, that basically means the market goes above. Maybe take support at this level, maybe a little bit lower, but more or less spends more time and price above it, kind of like that. We may see it, we may not see it, we may see something straight up, who knows. But the general theory, the analysis basically comes down to what I just discussed. We want to see sustenance above it. Count wise, the market does remain bullish, and we had already discussed the pullback level. The pullback level remains the same. It is quite deep. It is 1400 to 17,300. That is a very deep pullback. So that's why I said it is kind of less likely that the market will go that deep, given that it is so super bullish. And within wave three, we want to see the market showing even more signs of strength. Generally, it's the strongest of the all the legs that we see, and this wave one itself is quite strong, as you can see. Right. So long story short, BTC remains bullish from a swing perspective, while a deeper pullback is possible to these marked levels just mentioned. It is a bit less likely scenario, and more or less, if you are out of this market, then it's a wait for breakout, not breakout long, wait for breakout, see some sustenance above the marked level 103200, and only then we will look for buying opportunities. If you're already long, then you already know that your long term positions have this as a support, and below it will be a problem situation. We'll have to relook at the chart. And with that, I can say that there's not much to discuss in BTC, right? Again, I'll wait a few moments before we end this webinar, because we have at this point in time discussed all the charts which we generally do discuss in these webinars. And if you have any doubts or questions related to this discussion or any of the past charts we have discussed, you can just let me know in the live chat here. For those of you who have stayed with me till the very end, thank you guys. And lastly, again, for those of you who are enjoying the content, obviously you must have hit the like button, and do not forget to share it with your friends or colleagues, or whoever, whichever trading group you are in, which allows sharing the content. Kindly try and reach at least 5 of those contacts, so that we can get the requisite kind of views here. So again, thank you guys for staying till the end, and you're very welcome, Luis. One sec. All right, that's it, guys. Thank you for staying till the end. Welcome, you are welcome, Lewis. You are welcome, Muhammad and Dawood and Raghu. So, with that being said, I'll thank you till for staying till the end. I think fourth or fifth time, and I'll see you guys in the next webinar. Take care till then.